I'm willing to bet that M-Kishore will be 90% and M-Pesa will be 10%. But the payment railroad needs to be there. The railroad has to be there for all these products to get distributed. In terms of cash from bank, largely the banking experience is, how to convert to cash. Because credit cards and debit cards are not adequately penetrated in all our markets. Even if I have an ATM card, I typically take the ATM card, take out cash from the bank. Or I write checks from the bank. So, one of the challenges of the cash economy is everything gets converted back to cash. So, both the sides are needed. One is the ability to carry a virtual container of cash. The other is increasing the usage of that cash. And that requires a large number of merchants to be created. In India, there are 450,000 point-of-sale machines. So, merchants who have point-of-sale machines. But there are 12 million merchants who sell goods, who are organized, retail, not informal. The 12 million people are not going to be able to afford a point-of-sale machine or any other lighter form of accepting a credit card payment. But all 12 million people have a mobile phone. So if you're able to virtualize the usage of the cash, money retention becomes possible. The bank becomes more interested. So if I receive money from my relative in an urban area, when I'm living in a rural area, I don't have to take out cash immediately. Whenever I need to spend it, I can spend it using the mobile phone. Then I've got security to the cash. Then when a bank comes in, I cannot pay interest as an operator because I'm not a banking institution. But if a bank is interested, they say, if you have got at least this much balance, I can flip this account into a bank account. For those accounts, banks will be willing to pay the operator to acquire those accounts. Because they're guaranteed that there's money in the account in the first place. So we need to explore this partnership between telcos and banks in a faster manner if both of us have to do it. In terms of interoperability, this is one of the biggest topics. Most markets discuss interoperability. It's almost as if banks want to be sure that I don't have to be logged in with one operator and therefore I should look for interoperability. Credit cards when they were first issued were not interoperable. ATMs when they were first started were not interoperable. The moment something became interoperable, the desire of any individual who's running the destination site became diminished. When ATMs became interoperable, they did not go to all the places that individual banks are taking them. They went to the most high traffic areas and said, let's make this economically viable. When credit card acceptance became interoperable, the merchant network actually shrank because the discount pressure was very high. So acquiring business was not profitable. So they said issue that 21%, but I don't have money to pay the acquirers. Interoperability is good in a mature state. If you want to cause penetration for the first 3-4 years, actually interoperability neutralizes the interest of any one person over the other. It's a market consequence. There is no doubt things have become interoperable. Nobody has to, even in a telco case, if I had an SMS to send, if I could only send with an Airtel network, it has only so much carry. But I can send SMS now across all networks, which is what makes interoperability a benefit. But it did start with telco regulators saying you must make them interoperable. Right? There was no regulation, there was no industry hue and cry. It's just simple common sense that when you have enough, but every telco first had to put up the SFC, had to promote the usage to its customer base before they could realize the interconnect benefit. Same way with telecom towers. Towers initially were put by respective telecom companies. At least in India now, all telecom companies share. If you're a brand new telco entrant, you get the entire footprint that Airtel has spent 15 years to acquire. But interoperability is a later stage in the market. In the initial stages, it discourages participation. If you're a bank and I'm a telco, if I come and talk to you and say, I'm ready to work very hard, I'll get you accounts, I can do this for you. If you say, I'm ready to do business with you, if all the other operators are going to do the same thing, I have a hard time explaining to my telco, how do I benefit from doing this deployment? Telcos have a big business, they make huge revenues. So to run this area, what is the motivation that a telco could have? You need to provide some initial motivation. With the more capacity of time, more of these customers are going to become bank. If they did not have enough money to save in the bank, that's the only circumstance they may remain in an e-wallet. So if I'm at the bank, I would encourage telco participation. I'd look for ways to find telcos to get interested, to put some money on the table, to do some activity, to open their agent networks. Because with secular passage of time, my business gets stronger. The more the ATMs, the stronger my business. I think, I may run out of time, so I'm going to flip through this and maybe if there are questions, but I've covered substantively the arguments. I think telcos add value in penetration. The mobile technology is not, even though 3G networks are there, the handsets, the customer sophistication is not going to be so rapid in making these become like internet banking terminals. So use of USSD channel, use of SMS channel is going to be important. There are only 999 shortcodes for USSD. They cannot be, typically USSD is used as operator service. So when you want customer care, those are the kind of usages for USSD. So I know that banks think that accessing USSD is an opportunity, but there are risks also to USSD. So if it is making sense to a large base of customers, we could do it. For example, we have not opened USSD for music. Although music is such a huge category, we sell more music in India than any music studio. We are the largest sellers of music, but I don't think anybody thinks that we are a maker of music. We are not a music industry person. We are not hiring music artists and manufacturing our own songs. We are a distributor. It's a payment network. It's a music network. It delivers products efficiently. Right? But if the need is across the spectrum, if you are driving financial inclusion, USSD access will make sense. If you are doing premium customer banking, USSD access is a luxury. Giving one USSD code to every bank is impossible. The number of banks there are in the market. Maintaining the technical standards of USSD is also a challenge. If the customer tries USSD banking, if the bank is doing an NWA process, the service is going to fail. We process 2 billion minutes. We have a very high expectation of uptime on our network because if your SMS gets delayed, we get complaints. Right? To deliver that service in a banking chain with multiple hops, any part of the transaction phase, telco is responsible. I cannot prevent them from calling my call center. I cannot say, look, I have no idea about this, call the bank. If somebody hacks into an account which is being used on USSD, well, how is the bank is going to say USSD channel? The operator thing. So there are challenges to this that we have to examine together. So it's not that this topic has not been thought about before, but we'll have to spend a little time in every market between the two regulators to make sure there is regulatory comfort, there is society comfort, there is appropriate media representation, so that consumers are not duped. Banks have to do for example, State Bank in India is now doing a campaign to educate people on risks of USSD banking, even as they're promoting USSD banking, which is I think good way to go. At least consumers are walking in aware that the limits are very low on USSD transactions, so that large amounts of money are not at play. So, but if you get an operator in and work in integrating your infrastructure, they can add pieces to the security. There is a digital fingerprint that we can pass. So there is a way that by collaborating together, we can improve the quality of the transaction, improve the security for the customer, and that would be a win-win in the longer term for the sector. So I think these are the conventional arguments for telcos and banks. So I don't want to repeat them. In summary, I think banks have to co-create the ecosystem. The onus is on the banks and the banking regulator. Banking regulator is 200-year-old. Telco regulator is young, they are 5 years old. They are a bit more dynamic. They will try things. But ultimately, this is the area which is held in the banking space. Unless banks believe that they are going to get this value from the telco, things are not going to be rapidly changed. It is not that telcos will not work with banks if we don't give them a larger role. But the extent of work that the telco can do is directly proportional to the amount of benefit that we can showcase that. We cannot deploy heavy investments in an area which seemingly is not going to give even width to the customer base. By width I mean the number of people in the overall customer base who can actually consume these services. But equally, I think, for example, banking, KYC, AML, all these disparate processes are done by strong BPOs. Either the two parties can contract with BPOs. Risk management, ownership can remain with the bank. Implementation of risk management is a BPO come IT excellence area. And for the lower the base and the larger the number of transactions, the more intelligence you need. Perhaps you have AI systems running for mobile payments at some point in time, which will then power the entire banking sector. Right? But the invention will get done probably on a large base because we really can't have human beings reviewing these accounts for AML, and therefore you will cause the next frontier in banking. Right? Or what is really the basic pyramid customer base. So in terms of regulatory intervention, my sincere, unfortunately, the regulators are not there, but this is to you. If you have a chance to discuss the regulator, if I were a bank, and if you buy my arguments, you should pursue this. There are two solutions. One is a pre-bank solution, a customer who is not yet viable to bring into the bank. Instead of keeping him in your books for 5 years and hoping he will come good, allow him to be pre-banked and get him to do money transfer. It's like a Western Union money transfer, postal money transfer. These are not taking business away from banks. If you have a base of 10 million people in Bangladesh, for example, doing money transfers, every year 1 million you will be able to attract into banking because you can give them interest, you can give them loans. So create an e-money framework so that you as a bank have a viable base to market to rather than opening in the open market, incurring the cost and hoping for the best. And in the bank partnership design, look to partner with the telco, in a manner which allows the telco to improve some part of the quality of the transaction, in security, in usability, in kind of technologies, in providing cash and power points. So one of the main things that State Bank is also doing, for example, is looking for agent networks, created by telcos to get deposits mobilized to the bank. I already have an account, but my branch is not near me. I can go to a close by area and deposit money. So it increases the footprint. It's a human ATM network that you refer to in this presentation. So this is I think kind of a visual design that could become blueprint. Ultimately, I think conceptual models, there are very many. I think it's going to take the hearts and minds of people in the banking sector and telco sector to trust each other and talk in an open way about the economics of viable, scalable design. If that happens in your market, you will establish an example for the rest of the world. I am very confident that one of our markets is going to do that. Thank you so much.